All right. So again, we normally start off with the indicator breakdown, but we're going to start off with the pattern of the week this week. And after this, again, Ladere should be here to go over the indicator breakdown and start his segment. But for this week, the pattern that we're going to talk about is the cup and handle. Now, if you're new to investing or you're new to trading, it's always good to try to find different patterns that a stock is doing so that you can use it to trade. So we'll talk about the cup and handle. Oops. Okay, Dave's putting his. Okay, perfect. All right, so we're talking about the cup and handle. So what are cup and handles used for? So a cup and handle will basically let you know that the stock price is about to start to go up in value. So if you see this pattern forming, you can say, okay, once this pattern happens, we know that the stock price is going to start to rise. And the way that this pattern is going to form is you're going to see that the stock is using these candles and making it's going up and down, it's having different price activity. Eventually, it's going to start to form this pattern. You're going to first start to see a U shape, which is known as the cup. You can see that it's going from a high to another high, but it's creating this U shape. And then once it creates this U shape, you'll start to see a handle pattern, a handle form, which is just the price is decreasing. And then once it breaks out this handle pattern, or once it starts to go above this handle pattern, then you can start to trade this. So you can see this is why it's called the cup and handle, because of the shape it's making. It's making this U, which is the cup, and then it's making this handle, and it looks like a little teacup that's being made. And again, this is going to let you know when you see this, pattern form, is letting you know that the stock price is about to go up. Now, if you're trading, you're not going to always see the same patterns. This is just one pattern that you can potentially see. You may see other patterns that's forming as well. But if you do see this pattern forming, it's just letting you know, okay, you can go ahead and get into a trade and you should make profit. You should be able to continue to see the stock price go up in value. All right. Any questions so far? Check the chat. Okay. Perfect. All right.
I have a
So
question.
go ahead. Go ahead, Dave.
What if it doesn't break that pattern?
What if it doesn't break this pattern?
Yeah, so the U-shaped, but it doesn't go up at the end. You know what? Just two lines. The handle, if it doesn't, after the handle, it goes down. What happens then?
Yeah. So if it goes down, I wouldn't necessarily trade this pattern. So that means that
Okay,
it's probably not going to happen. So if it starts to trade downwards, I wouldn't even try
for
to
that too.
put a handle pattern to form. So if it
Okay.
breaks below this bottom handle,
Mm-hmm.
and it keeps going down, you might
Yeah.
not want to trade it, because it could be another pattern that's forming. It could be like a double bottom or something double bottom may be forming, or something else that could be forming. So I wouldn't necessarily trade it if it was to break beneath the handle. Yeah.
Okay. Thank you.
No problem. Because these patterns are not 100% accurate, right? It's not going to happen
Yep.
100% of the
Yep.
time. So if it doesn't happen, don't feel like you have to get into the trade. You don't
Oh,
necessarily have to
it's
get into it.
now I
Good
get it.
question, man.
Yeah. Thank you.
Mhm. Right. And so I won't use, well, I'll use this example. Yeah, I'll use this example first. All right. So here's a very small example of a cup and handle. I'll show you another example as well. But so basically we see that this stock price, it created this U shape here. It created this cup in this section, right? It created this cup, and then it created the handle. So when you're trading patterns, whatever pattern you're trading, you want to have a checklist that we have, right? So for the cup and handle, the first thing that it needs to do is it needs to create that cup, that U shape. After it creates the U shape, it needs to create the handle, right? It needs to have some type of pullback happen. And then once that pullback happens, you want to see it break above that handle. And once it breaks above the handle, that's when you can start to get into your trades. So we see that we have the cup created, the handle was created, and then we have the breakout. Now, one thing I like about cup and handles is that you can kind of predict what price the stock is going to get to. And that's just by doing some simple math. Perfect. All right. So and it's done by doing some relatively simple math. So if you take the very top of where we started the cup, the U shape, which is at about I put 142 here. So we'll say at about 142 is where the cup began. And then if you take the bottom of where the cup was at, which is at about 135, if you take those numbers, so 142 minus 135, and you take that difference is how high the price is going to go. So we have a $7 difference in price. So with this $7, we're saying is okay, once the stock breaks above 145, if we just add $7 to 145, that's where it's going to go. So if we was to add 7 to 145, that's going to be about 152. And you can use that as your target price. So 152 is going to be, we're saying, okay, this stock, once it breaks above 145, it should get back to 152. It can go higher than that. It can get really close to it, but for the most part, it's going to hit 152. And you can see here, if we just look, 152 is where it's at. Okay, so that's how you can use the cup and handle. So once it breaks above 145, you can go ahead and get into your option play, or you can swing trade this, and you know that your target price is going to be 152. Once it hits 152, I'm going to go ahead and get out this trade. Okay, any questions? Okay, perfect. And let me pull up this live example that we can use. Just swap over. Perfect. Let's use this. All right, so we're going to use, and let me, oops, it allows me. More. Okay, that's just it. Refresh. Let's refresh it. Not sure why it's not letting me use replay. Okay, so it's not going to let me use replay, which is fine because we can just do this. All right. And then that's okay, so let's just say we're looking at MU, right? And we're saying, okay, we want to get into a play with MU, but we're not sure if it's going to continue to go up or if it's going to start to go down. So what you can do here is we can see what type of pattern is forming. So just looking at it, I can see we have this U shape that's happening. So we can say that we have a potential cup and handle pattern forming. So remember, we said the first thing that needs to happen if we think it's going to be a cup or handle is it has to be creating a U shape, right? So if we start to draw from here all the way over, if we pull it down, we can see this is a relatively is creating a U shape. It's not going to be perfect. It doesn't have to, the stock prices do not have to continue to touch these lines, but it's relatively close to creating this U shape. So we can say that, right? And then the next thing that needs to happen is it needs to create some type of handle, right? So we can see here, we have that U shape created. Once it gets to the top of that U shape, we can see that the stock price starts to trend down. All right. So the stock price starts to go down, and then if we do this like this, perfect. So it creates this handle. Now the handle doesn't have to be a big handle, but this is a handle that's forming. We do have some consolidation, and all we need now is just for the stock price to break above the handle or the base of the top of the cup, the U shape, which it does. And then we know that once it breaks above it, that's when we'll start to get into those plays. And then remember, we said that we can calculate how high this is going to go, right? So you take all those out, and then we'll say, let's draw some horizontal lines. Okay, so from at the very top, we can say this is about $88. So where the cup first started to form is at about $88. And then if we look for the bottom of the U shape, the cup pattern, we can say it's at about $48. So we'll say 48. So 88 minus 48 is going to be 40. Right. So what we're saying with that is it's going to be a $40 increase in price once this stock breaks above this 88 range. Have any questions so far? Is that clear to everyone?
So now, okay, so it's done its cup and handle. So where is it now? Is it forming a new pattern, or is it sort of still part of the cup and handle?
So all of this is going to, so yeah, and I'm going to get to that. So this is going to be forming something new, but for this cup and handle, I'm just showing this as the cup and handle example. But for the cup and handle, it completed the cup and handle, right? Because we have 88 minus 40. That's about a $40 increase. So we're saying that the stock can get to about 120, 128 is where it can potentially get to, right? Just looking at this pattern for this pattern. So if we was to draw, 128 is going to be at about right here. So right here is where you would have been getting out of this play. So once it broke above this 88 range that we have here, you'll get into your play and you'll stay into that play until it gets to 128. Anything after 128 is not necessarily going to be part of that pattern. This could be another pattern that's forming. You can see that it got to 128. It took a few weeks for it to get to 128, but once it got to 128, it had some rejection on that end, and then once it rejected, it started to pull back, and then it broke above it. But currently, if we look at Micron, it's creating a new pattern, and yeah, it's creating a new pattern currently.
What's the new pattern? Can that be seen as a new cup and handle?
Right here,
Yes.
this right here, I wouldn't necessarily say is a new cup and handle just yet. This could be it could play out to be a new cup and handle, but right now it's looking like it could either be a double bottom or it could be a bearish flag. So I would just be a little bit careful on playing it. I would be waiting for it to see if the stock can get back to this $88 range, because this does look like it's bottom, and it looks like it's trying to get back to that bottom. Just looking at all of the indicators currently. Yep. Jessica, you have a question?
Yeah, so I see you have it set at like going all the way back. What is it, like 4 years or something? So is it general? What's the best amount of time to look at when trying to find a cup and handle? Is it any period of time, or is it like years or months or weeks or like?
Yeah, it's just going. So that's just going to vary on what type of like play you're trying to do. You're looking for like a relatively long-term hold, or like a play that's going to maybe take like a year. Then you can look at the weekly chart, right? If you're looking for something that's going to happen relatively quick, then you're going to be wanting to look at like your daily time frames and your hourly time frames for that.
I see. So like if you wanted to do over a long period of time, you would look at the yearly, right?
Mm-hmm.
And then if you wanted, oh, I see what you're saying. Thank you.
Mm-hmm. No problem. Yeah. So that's the cup and handle. Do I have any questions? Any more questions? All of these questions have been great. Perfect. And again, just bear with us a little bit. He'll be coming anytime to go over the indicator breakdown. So all of this information for anyone that's new is going to tie back in, and you'll be able to understand it a little bit better. But it's always good to just start off with something. Let's see. See if you have some.
I have a question.
Yep, go ahead.
Is there any other indicators that look similar to the cup and handle?
Say it again.
Is there any indicator that looks similar to the cup and handle?
What do you mean by that?
Like, can you use another indicator to find it?
To find the cup and handle?
Yeah.
No, so it's going to be like the cup and handle is going to come from the stock prices, the actual candlestick.
Okay.
But after that, you can use the other indicators to justify if it's going to happen or not.
Okay.
So you can use like your
no. Sorry, I mean your patterns. Sorry, your patterns. Is there any other patterns?
Say it again.
Is there any other patterns I could use in place of the cup and handle?
Oh, yeah, you can use other patterns, but the thing is, they will have to be forming. So, like the patterns,
Okay.
you can't just I can't just go to a regular stock and say, okay, this is creating a cup and handle. That actually has to be forming, right? So,
Forming it.
like for instance, when Ty said is another cup and handle forming up here, not necessarily. It could be, but right now it's looking like this could be like again a double bottom or a bullish flag. So the way that you are able to determine if a pattern is forming or not is you're gonna have to draw those trend lines, right? And the trend line is just us drawing those blue lines that I'm putting up here. Is just that's the trend line. Those help you out a lot, especially when you're new.
Okay.
It helps out a lot with trading and finding out those patterns. So when I first started, I used to just come to a chart just like this, and I can also I'm gonna hide this as well. So I used to just come to a chart like this, and I would just start drawing my trend line, and I would start from the right and work my way to until I find something. So I would start from here, and I would just draw. Okay, I see my stock price from here it's going down and coming up, so I can just draw a quick little trend line here. And then I don't draw each green and red candle, but I just draw the macro.
I
So
see.
it's going up right here. It starts to come down, touches this level, and ultimately is going back up, right? So we have this forming. So I see that we have something forming here. If it doesn't look like it could be some potential, I'll continue to draw. But from here, I know that, okay, I can draw some. I see that this could be a potential bullish flag, or bearish flag, excuse me, or it could be a double bottom just because of how it's formed. And then that's, of course, me knowing that is because I constantly watch different patterns and I know what's happening. But if I was relatively new, I would then just start to draw support and resistance from here. So stock price went up, it tested this area, so we can call this some type of support or resistance. It came down, tested this level, so we know that this is also going to be a floor or a ceiling for our stock price, and then it went up. So from here, we can see that, okay, it tested 111, so this is going to potentially, it's rejecting that 111, 112, 111 level, and it's going to potentially continue to go down to about 88. So with that, if it continues to go down, I'm waiting for it to test 188 before I see how it's going to happen. And if it rejects this level, then we could be seeing this create a double top, right? We could be seeing the stock price try to test this level and continue to go up. And if it breaks above this one, if it rejects 88, we're going to see it reject 88 and go back to 110, 112. And if it breaks above that, then we could be starting to see this go up and create that double bottom.
Okay.
Does that make sense for you?
Yes, it does. Thank you.
No problem. Good question. Good question. Okay, I see Ladarius says he's back. Okay, perfect. Any other questions? All right, perfect. So Ladarius, you got your computer set up now? I'm not sure if it's set up.
Yeah. Yep.
Okay, perfect. So I'll pass it out to Ladarius. I already started recording the video and everything, so you can just go ahead and go in for the indicator breakdown for him.
Okay, perfect. All righty. I appreciate that, Mark. Let me go ahead and share my screen. All right, sorry about that. I was late trying to be Superman, just trying to be in a million places at once. I got stuck in good old Atlanta traffic. And I underestimated how long it would take for me to make it back. But I am here. I was going to someone's birthday party and trying to be back at the session in time. So I apologize. All right. Indicator breakdown. And we need to look at some news. Lot of good things are happening for the market and for crypto. And then we're going into this new geopolitical landscape when we get Trump in office on the 20th. So we get to see how that's going to impact the market. Is it going to hurt tech? Is it going to help tech? So on and so forth. But let me share my screen. Where we at? You want to do this one? Yeah. Bingo. All right. So, oh, didn't mean to do that. All right, let's look at the calendar real quick, the economic calendar, to see if there's anything that we need to be aware of this week. Scroll up here. All right, so Monday, we don't have any major reports. Tuesday, no major reports. Wednesday, we do have core inflation rate. So Wednesday, what I would do, especially for my people that are trading options, just watch the market in the pre-market. So the market opens 9:30 Eastern Standard. Around 7, 8 o'clock, just start to watch the market, because this report comes out at 8:30. If the report is good, the market is going to continue in the upwards direction. The market, I'm sorry, if the report is bad, the market should be pulling back some. I think it should be stable, because we can see that the forecast and the prior is the same number. So it should be stable, but again, that should be. There's no guarantees in the market. So Wednesday, we got to watch that. Thursday, we do have the PPI, which is pretty much another inflation report. And you can see that the forecast is a 0.3 and the prior is a 0.2. So these are some numbers. If you're into watching reports, these 2 days, just be careful when you're trading. Again, they come out before the market opens. So for instance, what I like to do if I'm in an option, since you can't sell options, in the extended markets before or after the bell rings, if I'm in a trade on Tuesday, I would need to go ahead and take profit before Wednesday roll around, because if let's say I'm trading a spot, right, and I'm up, I don't know, 50% on a trade, and I need to take profit, but I roll over into Wednesday and this report comes out at 8:30, I won't have a chance to take profit, right? I'll just have to deal with whatever comes with this report. It could be good, bad, whatever, you name it, and then I have to deal with the aftermath. So that would be my word of advice for my option people. If you're in Monday, Tuesday, you're looking good. Wednesday, or Tuesday evening, you may want to go ahead and figure out which way you want to go with the trade before this report comes out at 8:30 and you can't do anything. Same thing for Thursday. If you're in Wednesday, watch out for Thursday as well. So nothing major this week other than these two reports. Give me 1 second. Other than these two reports, do I have any questions? Perfect. All right, so I'll take silence as a thumbs up. All right, so let's do a quick indicator breakdown for my newer people. I see we have some new people in, and this is going to be quick because I was late. All right, so let's break down everything on this chart. So this is the SPY. I'm looking at it on the week. We need to put it on the day, and I'm going to explain to you everything that's on my screen. All right, so the first thing we need to lock in on is the RSI. So the RSI stands for the Relative Strength Index. This indicator is pretty much telling you if a stock is hot or cold. So I put this at the top of my chart so I can know if I want to trade a stock or not. If I'm investing, then I may not look at a daily RSI. I may look at a month RSI or a week RSI. But again, if I'm just going in looking to set up some trades, first thing I'm checking is the RSI. And what I need to figure out is what this number is in the purple. Like I need to know, is the number in a good range or a bad range, right? So this range is between the bottom is 30, top side is 70. A good point for your RSI, in my opinion, is around this middle line. This middle line is 50. I like 45 to 55 pointing up. Sometimes you may be able to get in on the 60 RSI, and then you can take it up to 70. Sometimes the RSI can go above 70. The max for the RSI, if you ever wanted to know, is 100. But the higher you get above 70, the more likely you are to pull back. Like we can look at, this is the RSI for the SPY on the daily. We rarely get up into the 80s. And when we do, there's sharp pullbacks. So my rule of thumb is if I'm looking for a swing trade, I'm looking for a stock to buy. Let's say that I want to buy the S&P or I want to buy Netflix or Microsoft, Google, whatever. I check the RSI first, and then I need to see, is it tradable? Does it have a tradable RSI? 70 RSI is not tradable, in my opinion, because at a 70 RSI, it is labeled as overbought. Now, when you're down at the bottom of the chart, this is oversold. So you have overbought, which means that it's doing good. A lot of people have bought it up, but you may need to sit on the sideline and just wait until it cools down for a better opportunity. I think that goes for a lot of the stocks in the market right now. I've been having, one-on-ones and conversations with different people, and they're like, man, what do I buy now? Everything is at all-time highs. You got the SPY, you got Apple, Meta, Google, all of them are at all-time highs. So where do I find profit? And there's a few names that we're going to look at that I have on my watch list that I looked at with Ty earlier. She has some pretty good ideas about those, and I agree, but we'll look at those in a second. But check the RSI. If the RSI on your stock before you trade it is unfavorable, then in that case, you may need to not trade that stock, wait until it cools off, and then hop in. Do I have any questions about the RSI? Any questions at all? Cool. All right, let's keep it rolling. All right, the body of the chart. This is the most complex part. I'm gonna hide a few of these things. They're pretty simple, but when you're looking at this chart, this is the main chart. This is where all the candles are. It's easy to get confused on which way the stock is going if you're looking at each individual candle. What I like to do is kind of back out. I think a lot of investors and traders don't back out on their chart enough, especially when you're trying to get the trend. If you're just looking for what's going to happen the next day, then of course you're going to be zoomed in, right? But if you're looking, okay, I need to know what's going to happen over the next quarter, the next month, the next 2 months, so on and so forth, back out, right? Just because if you're looking at a daily chart, each one of these candles, green or red, represents the price action for one day. So it represents the stock going either up $5, down $5, and this is just telling you per day. So if you're looking at this, this is a lot of candles, but these are only days, right? But to get the trend over the next 3 months, you may need to either back out or just go to a higher time frame, right? You can go to the weekly, and then the candles look a little cleaner, and then you can say, okay, cool, we're in the uptrend, right? If that's the information that you need to acquire before you hop in the trade. Now, another thing is that make sure you identify your support and resistance lines. I keep telling people that you need to know what's realistic when you hop in a trade. So you're looking at the SPY. The SPY is at all-time highs. It's at $607.81. Cool. But if it pulls back, where is it going? Right? Where has it touched frequently on a pullback and then moved higher? Right? So I got this blue line right here as my support line. So if we're looking at the SPY at 607 and you're wondering, okay, SPY is at all-time highs of theirs. If it pulls back, where is it going? I'm going to tell you, I'm trusting my first line of support, right? And support is pretty much the line that's going to be underneath the stock. If I put a line up at, 615, that's going to be my resistance. So the support line is below, the resistance is above, and that creates your trading range, right? If we look at these two pairs, we have a line below that can be your support and a line above, which will give you your tradable range. So right now we got this line below. We do not have a line above because right now we're at all-time high. The SPY in the history of the stock has never been this high. So we don't really know where to place that line above. But we do know that if it pulls back, it's coming down to this floor at least. So 600 is a good place to watch the SPY. Right now it's at 607. And then for my people that trade options, if you're trading options and you're using puts, this could be also a good place for one of your strikes. So if you're looking for a strike for a put, I normally place my strikes around my support. And I normally place my strikes for my calls if I'm making a bet that the stock is going to go up around my resistance. So again, setting these two lines, and I mean, there's multiple support and resistance, but setting these lines will help you be realistic with your trade. It will help you be realistic with your stock. And again, if you're investing, you may need to use, a different way or a different approach. But if you're just trading, I need to get in here and I need to get out there. Setting these lines are going to help. And the rule that I have is that if you see 3 or more touches or candles at the same price point, go ahead and place your line, right? So we couldn't place a line right here because there's not 3 or more touches in my book, right? And what I mean by 3 or more touches, I needed to actually, and I can zoom in. So I need the stock price I need the candle to go to the point and reject 3 or more times, right? So if we look at this point right here at 600, we can see stock popped up, boom, it hit this, it kind of chopped a little bit, touched it a few times, and then it rejected. And then it went up. Guess what? Same price point, rejected on this candle, tried again on green, rejected again, and then it finally broke through on green to keep going. So this is a clear line of support when we come back down. So anytime we cool off, support is where we should be cooling off too. Any questions? Cool. Let's keep it moving. All right. MA ribbon. So the MA ribbon stands for moving average ribbon. Moving average is just the average stock price over any given period of time. Since we're looking at the day, we do have a 20, 50, 100, and 200 moving average set up. So this is your 20-day moving average. So when we look at this yellow line, that's the average stock price over the last 20 days at any period in time. So if you just hover over the yellow line at whatever, let's say this is December 5th, it was at 597.93, right? If we look at it today, and right here in the yellow, 597.88 was the 20 MA, the 20-day moving average on Friday. So knowing the moving averages for these stocks is always good, because you can see, is it averaging up or is it averaging down? So when you're going to place your trade, of course, you don't want to buy something that is on average going down, right? You want to buy something that's on average moving up. So that's what the moving averages are going to help you to focus on is, okay, cool. I can look at it. I can look at the candles. I can look at the stock. I see it's moving up in price, but what are the averages doing, right? So you look at it, you got the 20, 50, 100, and 200, just like I have here. 20-day, 50-day, 100, 200-day. You know that the stock is averaging up when you have them in chronological order from least to greatest. So we got the 20 on top, 50, 100, 200. If you have them stacked in this order, that means that the 20 is going to be leading the way. And it's easier to place trades when you have your moving averages in this order, because the only thing you have to focus on is the 20. And you can see that if I scrunch this up, it's really mainly bouncing off of that 20 as it moves to the upside. We had a situation right here where it broke below the 20, but then it catapulted. Like we have a gap right here from where it started at what, 570, and it shot up to 591. So a $20 pop happened what, in a day or two, right? From being below that 20. But other than that, if you're on that 20 MA, you got your chronological order stack moving averages, you're going to get that bounce, right? So we can see here, came in contact with a 20. You could have set up your trade here. It popped off, went up to one of its resistance levels, chopped around a little bit, came back in contact with the 20. Again, it did drop below. This could have been an extreme buy point. I would have checked my other indicators at this time. Easily bought in along this 50, as long as the other indicators were telling you that it was oversold, and then it catapulted. This is a crate again. For the SPY to do this, this is a large stock. For the SPY to shoot up like this in what, a week, is kind of ridiculous. But it shot up to 600, rejected. Guess what? Came right back down to that 20, and then it bounced off and went higher. So that 20 is extremely important. I know it may look a little complex, but if you find easy charts, the trades are easier, right? So don't force any trades on a complex chart. You look at a chart and you have all of your moving averages all mixed up and you don't understand which way it's going, just don't take the trade, right? We want to take the easy layups and stop forcing the hard half-court shots. And this is the easiest, one of the easiest ways that I found to do it, especially for swing trades, is stacking those moving averages and then just focusing on that 20. And when they come in contact with that 20, that's going to be a good place for you to go ahead and buy and take profit once it goes up to resistance. I said a lot. I know moving averages are probably the worst thing for some people, just because visually it's not that appealing. But do I have any questions? Any questions at all? Let me check the chat real quick. Good information. Yep. Cool. All right. No questions. Let's keep it moving. All right. VRVP. I'm going to touch on this one real quick. The VRVP is your visible range volume profile. This is really a cheat code if you get to learn how to use it. A lot of people stray away from this one because it's kind of complex in how you understand and how people explain it. But the easiest way that I found to use this is that pay attention to the different nodes. These bars that extend out to the left are called nodes. The further the bar sticks out to the left, the harder it is for the stock to break past it, regardless of the direction it's going in, right? The reason why is because when these bars stick out to the left, that is a lot of volume sitting right there. So anytime you have a spot to where there's a lot of volume, the stock is going to stop and slow or either chop. So you'll notice that when we look at, and I can zoom No, I'm not going to zoom in. But this bar right here is also lining up with our support. And you can see that the stock chops at this level twice. It stopped right here on November 11th, went down, came back up November 26th, and it's still chopping at that same price point. Guess why? It's because there's a lot of volume sitting right there. And then, I mean, 600 is a number that we've been trying to get to the whole year. So a lot of people have been selling, buying, a lot of activity has been happening at 600. So now when we pull back again, if you don't remember anything else about the VRVP, the further these nodes stick out to the left, the harder they are to pass. So when we pull back, this also reinforces the fact that I was right in picking a nice support for the stock to bounce. We're all-time highs. It's going to come down at some point. 600 is probably where it's going to check in at. Once it comes down to 600, there will be a nice buy point for a move back to the upside. We also have that 20 MA. That 20 MA is climbing. That 20 MA is at 597.88. So guess what? It's going to also reinforce that support point or that support line when we get this to pull back. So again, VRVP nodes are sticking out as the stock falls through the different nodes. Watch out for the ones that are like jutting out. These are the hardest ones to pass, and these are the ones you're going to get the most activity on. Even on this one, I can place a line right here. Boom. You see a lot of chop right here on that line. We drag our mouse over to the right. We have a lot of activity as far as volume right there. Right? It's no coincidence. You can even look at this one. A lot of chop on the same line, so on and so forth. You get the idea. But that's the VRVP. Again, if you can take the time to actually understand this one and use it, it also adjusts depending on the time frames you look at. So if you put this on, let's say you left it on the day, but you scrunched it up, add more candles and information in, it also adjusts. That's why I say this is a cheat code, because I could take this down. Say I'm day trading, I could take this down to the 15-minute and get the same type of information, right? On where do I need to get out, where the ledge is, where there's a lot of volume, so on and so forth, and make my trades based on what I'm seeing on the VRVP along with my other information. So again, VRVP is a hack once you learn how to use it, but it serves no purpose if you don't know how to use it and you just have it, on the screen and you're not utilizing it. But do I have any questions about the VRVP? And that was just a little run through. There's some other stuff that it can do, but for the sake of time, we'll keep it at that. Any questions? Cool. Let's keep it moving. Next thing, MACD. So the MACD, top left-hand corner, is telling us what we're looking at. This is your moving average convergence divergence. This is just telling you which trend, which way the stock is trending. So these two lines have a relationship to where if the blue line is on top, that means that we are in a buy trend. So if you're wondering, okay, I'm looking at Netflix, I want to buy Netflix, but are we in a sell trend or are we in a buy trend? And other than just looking at it visually, you can look at the MACD for that time frame. And if the blue line is on top, we are in a confirmed buy trend. If the yellow, if the red line is on top, then we're in a confirmed sell trend. So these are just the different types of pressure that is being applied to the stock. So again, if blue is on top, buying pressure is being applied to the stock. The pressure to buy the stock is being applied, meaning that the stock is going to want to go up. Again, the SPYs are all-time highs. So this blue line being on top makes sense because people have been buying it up and it's in a buy trend. Now, eventually this blue line is going to cross and intersect with this red line. Now, when the red line is on top, that means that the selling pressure is being applied to the stock and the stock is going to want to sell off. For reinforcement, check the histogram. This histogram is telling you the same exact information. So if you're looking at these lines and you're like, I can't really tell which one is on top. If you have this green, that means you're in a buy trend. To the far right, whatever color this is, this tells you the trend. If it's in red, you're in a sell trend. Now, these colors fade. So you, for instance, this situation right here, you got dark green. Once it starts to fade to that light green, if you're in a trade, you may need to start to take profit or get out the trade, because once it starts to fade to that light green, guess what? It's going to flip over to red. It happens every time. This is right. This is again, it's the buying pressure decreasing and the selling pressure increasing, right? So it's starting to fade that light green, and then boom, it flips to red because selling pressure just took over, right? Another thing is that you want these lines to cross, especially for my option people. For my people that need high volatility, you want the stock to either spike up or spike down. One of the easiest ways to catch those spikes is when you get the MACD crossing over, because what's happening is that the trend is actually changing. So when the trend changes, the stock needs to pretty much make a move to either side, and it's going to move with some force. So for instance, when we had this sell trend where we had the red line on top for a short while and blue came around and crossed over, as soon as you get this MACD crossover, the stock is going to pop to one side. I'm not going to say, you know, this $600 stock is going to jump $50, nothing crazy like that, but it's going to have a day where there's a lot of volatility and there's a spike in price to the side that it just crossed over to. So all of these indicators are extremely useful once you get to learn how to utilize the different aspects, and then you get to pull in the information that they're giving you to make better informed decisions. Do I have any questions about the MACD? Cool. Last one, secondary indicator. This is the stochastics RSI. Again, you don't have to use all of these indicators. I don't use all of them every time, but some trades I do, and some trades I don't. It just depends on what indicators I'm looking at and what style of trade I'm using. But I like to just make sure you understand everything that I have on my screen. So the stochastics RSI, simply put, is your momentum indicator. So if the MACD is telling you the trend, I want to know how much momentum do I have behind that trend. Cool, we're in a sell trend, or cool, we're in a buy trend, but are we selling off really bad? Like, are we just bleeding every day? Or are we going up a lot? Like, I need to know how much gas we got in the tank for the next move, because that's also going to help me figure out how many shares to buy, how many option contracts to buy, when to get out, so on and so forth. So the way that the stochastics RSI work is that they have it has a few ranges, right? So in this blue, you got the 20 at the bottom, and you have 80 at the top. So slightly different from your normal RSI, still functions the same way, as in these are different checkpoints. But the thing about the stochastics is that it loves to frequent 0 and 100. So what I mean by frequent is that if I scrunch the chart up, you can see that it hits 100 a lot across the top, and it hits 0 a lot. So the fact being that we just touched 100 here and we're coming down, that means that the momentum is slowed to the upside. So when your stochastic indicator is up high, that means we have more momentum to the downside than the upside. Again, this is just a gauge on momentum. So for my people that are playing options, if you want to make a bet that the stock is going to pull back with some force, you want your stochastics to be high. So again, if I want to make money on the fact that the stock is going down, I want my indicator to be up here. Now, on the flip side, when we look at a few other picks that I have, you're going to see the opposite. You may see the stochastics down here and it's pointing up because it's going up to 100. So if it's not making sense right now as far as how it works is with momentum, I have a few examples. And when you see those examples, it'll make more sense. But again, your stochastic has different points that I like to check in at. So right now it's at 94. When it comes down, the first stop is going to check in at 80. And then you got 50, 20, 0. These are the places to check in at. All right. So it hit 100. Again, 80, 50, 20, 0. Now, if you want a stock that is going up, a quick tip is that catch these stochastics bouncing off of 0. So once it comes all the way back down to 0, you want to wait until it crosses over 20. Once it crosses over 20, boom, you can go ahead and look at all your other indicators, make sure everything lines up, and then you can take this stochastics from 20 to 50, potentially 80, 100. Do I have any questions? All righty, I'm just going to assume that everybody is picking up what I'm putting down and we can keep it moving. All right, so this is the SPY. We can use these same indicators to make a informed decision. What do I think about the SPY? Where are we going now, right? So I think that this stock is overbought. Of course, I mean, the indicators are screaming that it was in a strong uptrend, but is this the time to buy the SPY, in my opinion? No. Is this the time to anything at all-time highs? This is just how I think about it. If you see anything at all-time highs, I wouldn't buy anything at all-time highs, because where's the money to be made, right? You're looking at something that already ran. So you're going to jump in and just lose money, because who's to say that what it just accomplished is going to do it again for you? So if a stock just ran for 50% and you see it, and let's say all your friends are talking about it, you done seen it, on the news, Instagram, whatever, you have to think, okay, when is it going to give me 50%, right? If it already ran 50%, there's a high chance that it's probably going to pull back. So just be patient, wait for a pullback, and then try to get in and take it back up to wherever it's going to be, depending on your indicators. So that's just a tip that I have. But again, the SPY needs to cool down. Of course, on the day, it looks hot. You look on the week, it looks hot as well. It's been running. It's been a good year, but it needs to cool off before it can move higher. This could go to 620. But I think before, on the way up to 620, we do need a retest back at 600. So if you're wanting to add the SPY to your portfolio, keep an eye on it. And I think that just being patient could pay out well for the SPY. Any questions on this stock? Ooh, I don't know if Mark already went through you all's picks. I can't see the older messages, but if you all have any picks, again, just throw them in the chat. If not, I'm going to go ahead and go over. Well, I'm going to go ahead and go over my picks anyway. All right, got a few goodies that I need to add. Let me pull these over. So we got Uber, and normally I will already have these put up. And I'll give you my ideas behind this one. This is another interesting one that Ty and I went over this afternoon. And then we got one more. Give me 1 second. There we go. Cool. All right. So these are a few of the stocks that I'm looking at. If you're in the Discord, you know that last week we were watching and trading Microsoft and Meta. So we'll do a quick recap of Microsoft and Meta. I'm giving you all a lot today. Just trying to make up for being late. So Microsoft and Meta. Sorry, I'm pulling it up on my other monitor. And pull this over. Cool. Let me get this SPY out the way. And why is it? That's cool. Okay. All right. Oh, get in there. Here we go. All right. Meta. So Meta has been going on the tear. And the news that TikTok is being banned has done nothing but help the stock. Honestly, this stock could be 675, 700 with the ban of TikTok. At the beginning of the year, I think we opened at 480 in January, 460, somewhere around there. And I said it was going to be a $600 stock. I did not think it was going to go to 623 this fast, but the TikTok ban is definitely helping Meta. Meta is also, they also have a whole bunch of things in the pipeline as far as AI and cool products that they've been using. They also have Threads, which Threads is doing pretty good as well. And it's finally starting to make them some money. So with Meta, if you're looking at Meta, you see Meta flying off the handle. The question is, do I buy in, right? Right now, if you aren't already in my opinion, I would wait. Again, a lot of things are at all-time highs. We've been talking about Meta for a while. It was consolidating from October to December. So this would have been a chance. You had a few months to get in before this run up. It's not like we haven't been talking about it, especially in the Discord. We've been talking about Meta for a while and playing it for a while. But on the pullback, you want to get in Meta, I would at least wait till about 609, 610. After that, I'm looking at about 595. So those are the 2 price points that I'm waiting for. If I'm going to hop back in Meta, we did what did I do? Did a call and we hit for over 100% on that call on Meta. I want to say it was a 620 call for Meta, and Meta went on a crazy run. I think we ended up like 124% or something last week. But yeah, 610, 595 are the two numbers that I'm waiting for. If it goes higher, I'm fine with that. If it pops tomorrow and goes to 630, 635, I'm cool with that because I want to get it at a good price. I want to get a good company at a bad time, right? So I want to get it at a good price. 595 would be ideal, but I also take interest around 610. Let me see. APA Corp stock. Susie, is that a? Oh, that's a stock you want charted out. Cool. And just you don't like Meta. I understand. Capitalism is always gonna lead to some crazy things happening, of course. But yeah, so Meta, that was what we did last week. Microsoft, this one, I mean, for a lot of my people in the Discord, we've been watching this one for a while and scratching our head on like, let me clean this up some. What's going on with Microsoft? But it's finally deciding to break out. You can see how long, like this is what, August to November, Microsoft has just been chopping around while the market has been reaching all-time highs, Apple all-time highs, Nvidia, all the other peers, that are in the multiple trillion-dollar club have just been running. And Microsoft, which great company, great position with open AI and all the other good things they have going on, they were just stuck. But they finally start to break out. It looks like they could be heading up to test this resistance that we placed a while back at 650. After 650, the next point to take out would be this 465 to the upside, and then we can get into the 500s. Honestly, I think Microsoft should be 500 to 550 right now, and aiming towards about 600 to 625. But it's just been consolidating for a while. So eventually, once it starts to move, for a continuous, I would say a continuous month, then we should get a nice breakout. So this breakout that we had started the end of November, and it's still running right now. But again, just be careful around that 450 range with Microsoft, because we could get a rejection. If not, we get a breakthrough. Finally, we get out of this dungeon, and then we can start heading to back up to all-time highs. Again, like I said, back out, look at larger time frames and get a different picture. So if we look at the week, we can see again that RSI is pointing up at 59. So it's not quite at 60 just yet, but it's not maxed out until we get to 70, in my opinion. And then you can just see how long it's been consolidating. You also got that MACD that's crossing over to the upside, that's putting us in that buy trend finally after this long sell trend. You see all the red on the histogram that we've been stuck in. We also have the stochastics that's climbing. We got a stochastics that's at 70. Again, the next target is going to be 80. If we break 80, we could be aiming for 100, which means that, again, if Microsoft can break and hold, it doesn't need to just tap 450. It needs to actually close above 450. Then we can be in position for a move higher. And we've been waiting on this one for a while, so we'll see what we get. Any questions on Microsoft? Any questions? Let me check chat really quick.
Darius?
Yvonne, what's going on?
Yeah, I'm still in my Microsoft option. I'm still a little bit down. Even though it's been going up great, it's closed the gap, but I'm still a little bit down. But I'm wondering, because of any pullbacks, cut with a little paper cut versus the big paper cut, So I was just wondering about that, if it's gonna pull back or kind of wait till December 20th is my expiration date.
Yeah, time decay is a real thing, right? And it happens. It's happening every day. It's being sped up on that contract. So honestly, like in my opinion, when I'm in these situations, what I normally do is get as close as possible to break even and just reset up the plate. Because sometimes, especially when you're dealing with a stock that's been consolidating, this is one of the worst things that can happen to an option, right? You jump into an option, you're like, okay, cool, it's gonna go up, and then it just trades sideways, because option needs volatility. Option, it needs a either push up or push down for that volatility, right? So the fact that it's been eating up a lot of time and money on the contract, again, if I'm in that situation, I'm getting close as possible to break even, and then I'll reset up, keep my eye on the stock and wait for a nice pullback to take it back to the upside. That's
okay. Yeah, I was wondering if I should just go ahead and close it and open up another one. Okay.
Yeah. You have different opportunities just depending on how you want to, attack the play.
Okay.
But it's good that it's coming back for you.
Yeah, it's helping.
For sure. Cool. I appreciate that. Any other questions on Microsoft? Cool. Next one, coin. All right. Coinbase. I know this is the talk of the town. And people want to know where it's going. All right. So when you look at, again, we just talked about how these moving averages work. You can see that coin was consolidating. It blew up from, 178 up into this range. And then it started to chop a lot. It couldn't figure out which way it wanted to go. And then it touched this 20 MA. And like I said, once you get your moving averages stacked, that 20 is going to be leading the dance. It hit that 20 and popped off to the upside. So this is what we needed to break. We needed to break and hold above this 341 line. Right now we're at 343. The stock was up 7% on Friday, which is really good. And when you back out, again, you want to back out and look at the whole picture, you can see that we have a next level higher that's at about 375. So this line, you can't even see it. I'll move to the other, let me see. Looks better on the week, I want to say. There we go. All right. See his line up here at 375, and I can really just crunch the chart up to show you. 375 right here is where we need to go. Again, for my people that know patterns, this is an inverted head and shoulders. Shoulder 1, head, shoulder 2, and the pattern really starts once it gets to 375. So once it hits 375 and closes above it, Coinbase is going to take off. I've been saying, again, I keep repeating myself, but Coinbase is $1,000 stock. I was saying it when it was 150, and I'm still saying it now. And we hit the rocket boosters as soon as we passed 375 to complete this big pattern that we've been building since literally the IPO back in 2021. So Coinbase is a nice play, a nice buy and hold, in my opinion. I was telling someone the other day that honestly, I'm buying and holding Coinbase until about 650. At 650, I'll let it fly and take its way up to $1,000. But I think anything under 650 for Coinbase is a nice, good hold, because again, crypto isn't going anywhere at this point. And it may evolve in how we use it and how we understand it and how we work with it. But to think that it's just one day is going to completely gone, I don't think so. Not with how much money we have, like governments are buying crypto and mimicking crypto with their own tokens, and there's a whole bunch of other stuff that's going on. But I think that Coinbase is one of those stocks that you'll look at in 5 years and be like, man, I remember when Coinbase was 343 and I was in the Sunday session, right? And now Coinbase is 1,500. But again, really nice setup for the long run. Now we look at shorter term plays. This is a nice play on the day. This is what you actually want to see when you're looking at a stock. So the RSI is not going to always be perfect. We look at that RSI, it is at 65, pretty high, but we know that it can over rev. It can break above 70. 70 is a hot point. So there's some room on the day for a weekly play. So like if you're buying options, or if you just want to swing some shares, you want to buy on Monday, sell on Friday, this could be a good setup for you. Also, if we look at that MACD, this is what you want. Pending MACD crossover to the upside. So we got the sell side, which was just dominant, and then we got that buying pressure that's creeping up. And then when these two lines touch, if that blue line take the lead, we're going to be back in a confirmed buying trend, and we should see Coinbase spike back to the upside, right? It's already moving. It's up 7% on the day. So once we get back in a buy trend, we should see a spike to the upside, which should take us up to that 370, up to that 375. We do have space on the RSI. And then if you look at that stochastics, again, I told you I had some examples for you. You look at that stochastics, again, this is your momentum indicator. It's telling you how much fuel you got in the tank. So if Coinbase decides to make that move to the upside, guess what? We have enough gas. We're only at what, 48 out of 100. That means we can go from 48 to 80 to 100. All right. So if Coinbase decides to move, keep your eye on it. If Coinbase decides to move, it's going to be a big move, especially since it's been stuck in this channel for a minute. Again, it's been chopping for what, 2-3 weeks now, and now it's testing a higher limit. So Coinbase is one that I have on my watch list for the week. Easy swing trade setup. You just got to be a little patient and just watch for entries. Again, in my opinion, I think what I'm going to do is just wait and see, can we hold above this 341? I know on Friday we closed at 343, but I need to see Monday when we open, are we still going to be up here? If we still up here, then they may get me to bite. But if not, if we pull back, I'm actually looking for a buy-in somewhere 310, 320 is where I would be looking at for a trade. If I'm buying shares, honestly, I want it even lower, down in the 200s, 260 would be ideal. But I don't know if we're going to get that right now with, Bitcoin, 100K, Ethereum is starting to move. The whole crypto sector is getting some attention. So I don't know if Coinbase is going to be cooling down that much in the short term. Eventually it will, but not right now. Any questions for Coinbase? Let me check the chat. We got anything? Just making sure y'all good. Nope. All right. Let's keep it moving. Next one. Uber. All right. So these two are kind of together. Uber and Lyft are in really good positions for long-term buys. And for people who want to do leaps. If you're a person that we had a guy in Discord, the only thing he would do is leaps. He would wait until good companies have bad times, and he would literally buy leaps. And some leaps, I've seen him turn $100 into like $3,000 off of a leap multiple times. Again, this could be one of those opportunities. Uber, great company. It's a bad time. It's been selling off. Uber is at $66. They had some news that they pulled back, I want to say Thursday, because of I want to say Waymo and Google. They had some news that they were going to be doing something, but it really didn't pertain to Uber and Lyft, but it tanked the stock. So I said, okay, that makes sense. That the stock has been doing well, and something stupid brought it down. But I didn't think about, is there a time to hop in? So we did a one-on-one earlier. Ty and I were sitting, we're looking at stocks, and Ty brought this one up. So shout out to Ty for putting these two, or actually the next one too, on my watch list. But Uber, great opportunity, and it's been consolidating. Remember, after consolidation, so this is accumulation. It's just building up and storing energy before it breaks out to the upside. Uber could easily go for 125, in my opinion, to the upside. So buying that, if you buy something at 66 and it goes up to 120, or it doubles pretty much, easy, nice swing on shares. You can also get in a nice position with a leap if you're into options. So what I'm seeing here, let me show you something. Scrunch it up some. This is making a bull flag. A bull flag is one of the most simple patterns to trade. A bull flag is just a strong move up. It flags out. It's not going to be perfect. Like this isn't the perfect flag, but it flags out in accumulation, and then it pops out to the upside for the same length that it went in. So if we look at the base of this flag, we can round that to $40. The top of this flag is $80. And the way that the flag works, again, the amount of money that it climbed by going into the flag, you just stack that on top to the upside. So this is going to about 120. Again, I just rounded, but it's going about 120, going to about 120 after breaking out of this bull flag. So when Ty brought up the conversation that they both pulled back, I think is a great time. I totally agree. Good stock, bad time. That screams trade, long-term trade, or start to look at some shares for me. And then if we look at it on the day, we can see that on the day it's been pulling back. Again, this is where I think Thursday had a really bad day, and then it hit our line. Like I placed this line, I don't even remember when I put this line, maybe a few months ago, but It slammed right into that line. It respected it. And we could see it actually drop lower depending on the market goes up or pull back this week. And you can get an even sweeter deal down at about 62. I think worst case scenario for the stock right now is 57. So what I'm doing is dollar cost averaging. And if you don't know what that is, dollar cost averaging is slowly buying into a position. So let's say if your goal is to own 100 shares of Uber, right? You don't just go in and buy 100 shares all at one time. What you could do is every time you could buy it on the way down the steps, right? So as it drops, you find these good pullbacks for dumb reasons. You buy in, and then you see a pullback again. You buy even more. You see a pullback again. You buy even more. So that's dollar cost averaging. You're just getting your average down by buying down the steps, and then once it starts to turn around and climb back up, you're good to go. Because I mean, let's be honest, is Uber going anywhere? No, right? Like, I mean, it's ingrained in our society at this point. I don't like if you take Uber and Lyft out the way, what do you have? Right. So I think we're too dependent upon Uber and Lyft at this point for ride sharing, delivering food and goods and things like that to for the stock to go bankrupt at any point in time right now. In the future, I don't know. If I could see the future, I would let you know. But Uber is in a great position. And then you look at Lyft. Guess what? Lyft did the same thing. Lyft pulled back right here as well. So that's the Thursday pullback, found its ground right here. And again, it could drop lower down to 14. But again, for me, I don't want to miss out. I would be looking at dollar cost averaging on both of these. So buying down the steps. And when it goes back up, it depends on if you're long, if you're holding long, or if you're just swinging it. If you're just swinging it, cool, take profit once it goes back up. But I do think that Lyft and Uber, they're going to be like the Coke and Pepsi of the ride share world. Like you always have a premium, and then you have a secondary competitor. Like I don't think we had this conversation again earlier. I don't think Uber would ever buy Lyft unless Lyft is like hanging on by a limb and it's about to go out of business. Then they may go ahead and buy it. But then I think that would create a monopoly. So I still don't think that Uber would buy them then. And I think that the competition between them both breeds innovation and is healthy for both companies. You can, kind of cheat off each other's sheets and see, who's doing what, when, and how to push the industry forward. So I think that both of these are a buy, Lyft and Uber. And both of them, again, really good companies. They're probably going to be around next 10, 20, 30 years. And I think this is, really good buy points for them. Again, pullbacks for dumb reasons, but this is where you as a trader or an investor should try to take advantage. Just on plays like this. Not saying you have to do Uber, Lyft. I can't tell you what to do. It's not financial advice. But for me, this is what I like to see. Good company, dumb reason, take advantage. Let's see. Any questions on Uber or Lyft? And if we look at, we can look at Lyft from let me show you Lyft. Yeah. Where is it? The week. Oh, how's it doing that? Oh, I need to reset my chart. Boom. There we go. This is what I want to show you. So Lyft has a different situation from Uber. It dropped back in January of 22. And it's been finding its ground. So a lot of people didn't want to touch it, but it's been finding its ground. And eventually this ground is going to give, it's going to bounce, and we could see us going back up to 40. So honestly, I need to reconnect my Mac to my other Apple devices. But climbing back up to the upside, I think is going to be a nice slow rise up. But again, it's $15. If you turn in $15 into $40 per share, let's say you get 100 shares, 200 shares over time, that's a really nice investment and a really nice play. So again, good company, bad time. That's a big question mark for should I invest? Any questions on either one of these? Cool. All right. This one, keep an eye on. I'm not adding this to my watch list right now. Well, it's on my watch list, but it's not on my trading watch list. Like I'm not trading this stock right now, but this stock has some interesting numbers. So people who look at financials, if you're into earnings, if you play earnings, this stock beat its earnings by almost 400%. So almost 4x its earnings. And the stock has been going on a crazy run. Like stock is at $196, and the market cap is only 5 billion. To put that in perspective, there's companies that make 30, 40 billion a quarter. I mean, well, Amazon makes like 150 billion a quarter, but it's companies that make as much as this company is worth in 3 months, right? But the stock has been again skyrocketing because it doesn't receive that much volume as far as trading, and then it's smashing its earnings. Like it's not even close, like 350%. To put it in perspective, Apple beats its earnings by Apple is a giant, but Apple is beating its earnings by like 10%, 12%, 20%, things like that. That's good. 350% is crazy. But then when you go back to this earnings here, almost 1100%, you 11x your earnings, which is crazy. So keep your eye on this company. They're making way more money than people are expecting, and they also pay a dividend. So you got crazy run up from the stock, but you're also getting a dividend payment. And I want to say these dividends come out quarterly. Yep. So every 3 months you get paid a dividend for just holding the stock. But again, right now I think it's sky high. And I wanted to come back down to earth. So back down to earth for me would at least be 180. In an extreme case, I like 160. And if they came to me and said, "Look, Darius, you can have it your way," I want 140. I don't think we're going to get 140, but 180 to 160 is where I'm watching for a potential trade back to the upside. Again, this one can move. Again, you can just look at its chart and see that after these earnings, it has been skyrocketing. And then the next earnings is expected to be another big number as well. And if they can beat this run may continue. So I'm just giving you something to add to your watch list, just to keep an eye on, to let you know what I'm paying attention to. So stocks like this always intrigue me because of the earning sides of things. So again, IDCC, just keep an eye on it. Again, another good one that was brought to me by Ty. So I appreciate this one and the other two, Ty. All right. Any questions on anything that I've covered so far? Let me check the chat. Susie, is that you? Yep. Susie, go ahead.
No, I didn't have a question. I just pushed the wrong button.
Oh, okay. Cool. Cool. All right. So it looks like we got a few stocks in the chat. Mark, did you again, I wasn't here, my bad. Mark, did you get a chance to go over their plays earlier? If not, if you already did, I can do these. I just didn't.
I didn't do any.
Oh, okay. Cool. All right, bet. So I'll let me finish reading this and then I can pass it over to you. And then you can cover these for them. Let me see. So we have APA Corp stock. What is the name of the BABA stock that costs less? It is a Chinese index. I will have to find that, Jess. I know what you're talking about, but I need to remember the ticker. I remember we talked about it, but yeah, I'll post it in the chat once I find it, Jess. Uber, yep, the delivery, Datadog, Tesla. Do you have any time for one-on-one? Yeah, Jess, I'll shoot you an email for one-on-ones. I don't have any time tomorrow, but I should have some time the rest of the week. So I'll shoot you a message, Jessica. And if anybody else, if you want one-on-ones outside of, like, we do have different resources. We have the Discord, we have these different sessions, we have courses, we have all these other things that it depends on your learning style. We can help you with. And if you have any questions that you want to sit down and have a one-on-one with me about, let me know. If you're in the Discord, you have different advantages with those one-on-ones. If you're not in the Discord and you just want a one-on-one outside of everything, I can get you that link as well. Let me see, because some of you all came through Eventbrite. If you came through Eventbrite, again, you can just send us an email or a message and I can get that information to you. And if you came through Meetup, Instagram, any of the other channels, again, shoot me a message and I got you. Let me see. All right, more stocks. Do you guys have my email? Yep, Jess, we got your email. So I'll shoot you that email and we should be good to go. All righty. Mark, I'll go ahead and pass it back over to you. So you can cover their picks.
Appreciate it. All right. Let me share my screen. Type screen. So I see the first one is QUBT, quantum computing. All right, so looking at the weekly, just looking straight off the weekly, this looks like this is getting ready to start to cool down. RSI level is at 93. Stochastic is at a 99, just left the 100 range. So it's pretty high. It's in that overbought region, right? If it was to start to cool down, or if it was to continue to trend up, which it looks like it's running out of steam, the next place that it can get to is probably just going to be at about, it's not that much. So at about $8.50, $8.40 is going to be a resistance level. That's just because of previous activity. We see we have activity back here, and even around here we have activity. So this is a nice strong resistance level to have. So if it was to trend up, it's probably going to try to come back to about 840 before it starts to pull back. Again, RSI level and the stochastic is looking pretty high. So I don't know how long it could sustain up here. So we should be seeing this pullback. The first place that it will go and test if it was to be pulling back, it's going to be here at about $6.70. And that's just because of the activity we have. We see stock price was going up, tested this area, rejected it. Even when it was coming up, it came, this one green candlestick, it shot up here and it started to reject that area before ultimately breaking above it. So that's going to be the first place that it's going to go and test support. So because that's really close to support, the next place after that, if it was to break beneath it, we have a nice range that we can draw here at about $5.23. So that's the next level that it could potentially make it to if it was to continue to pull back. And let's look at the daily. Again, on the weekly, this is basically has run hot and needs to start to cool down. If we check out the daily, on the daily, RSI level is pretty high over BART region. The daily level is saying that it's coming. It was trying to get back to that oversold region, and now it's starting to point upwards. We could be seeing this stochastic get to this 50 range, the neutral range. With that, I'm thinking it's going to probably try to come back and test this resistance with this level. So I'm looking at it. Maybe we can see it test resistance, and from there, I'm looking to see what happens. Just on the daily standpoint, because it can get back higher to this 100 on the RSI, this 90 range on the RSI, but that's, again, it's not going to have enough steam to keep shooting higher and higher than that. But if it gets to this $8.40 range and breaks above it, the next place we can see it test on the daily, it's going to be here at about $9.30. So that's the levels of that we can potentially see it. Again, I don't think it's going to be able to sustain up there. So if it was to test this 840 range, I'm thinking it's probably going to reject and start to trend downwards. And with that rejection, the first place is going to test this 660 range, 670 range. And after that, we could be seeing it get back to 530. Any questions on quantum computing?
No, I'm good. You tested it all. Thank you.
All right, no problem. So let's check Hive. Let's do the weekly. Hive Digital. Okay, so Hive Digital, RSI is at 57, so it still has range to get back to that overbought region. We are looking at the stochastic to where it's trying to trend down to the neutral range. So if it can break beneath that stochastic RSI, we could be seeing this trend down more. With that, it looks like it just previously, if it was to reject, if it was to continue to trend down, our support, we can draw it here at about $2.57. And we can see that that's a strong level of support. Anytime it tests that support level, we see some type of increase. So that could be what's happening now, because we also see we can draw resistance. We can have a nice little, so it's currently, you can have resistance at about this area. So resistance could be at about $4 and $5 could be the resistance level we can draw for it if it was to, and it looks like it's been testing that level. It looks like it tested this level here. It's rejecting it. So if it was to pull back, again, we're probably going to be seeing this get back to about $2.50 before it starts to trend back upwards. Now, if it was to break above this resistance, the next place that it'll go and test, we just keep it real strong or real low, is here at about $5.75 will be the next place. We can see this was a level to where it broke above it, pulled back, and tested this range. Jessica, you have a question?
Yeah, I was just gonna say, look at how it has a lot of earnings at the bottom with like the green E's, and it seems like that could, is it true that that could be a possible indication that the stock is about to go way up?
Oh, from the earnings reports? So earnings is 50-50 with the earnings reports. Yeah, that could, like green earnings, good earnings can cause the stock to go up, but then also green earnings with the not the right news to tie in with the earnings can also cause it to go down. But that's the earnings is just a good indication that they're financially stable by them having so many positive earnings. So that could be for a long-term hold. That's something that you will look at. Okay, they're meeting their goals, they're exceeding their goals every single earnings report. That's a good company to invest in. But again, for earnings, just looking to see if it's going to go up or down. A lot of times you can see that green earnings may also cause the stock to go down. So it's kind of a 50-50 with the earnings. Good question. Any other questions? Perfect. All right, so again, we see that it looks like they're probably going to be coming down. If they do come down, it's going to be to about $2.50, where that's the support, and it's a strong level of support. So with that, if it tests that $2.50 range, that's what I would be looking at to get into play here. So if it tests 250 and it can reject it and we start to see it trend upwards, go ahead, you can get in, and then you can hold it until it gets back up to $4.50, because that's looking at the previous historical data, that's what's been happening. So anytime it tests this 250, it starts to trend back up to about 450. And with that, again, that you may have to hold it for a while, a few months, maybe a year. But with that, you'll be making 100% of your money back, right? So if it hits 255 and you go ahead and get in and you sell it at 450 or $4.80, you made a little bit more than 100% of your money back. So this could be a nice swing trade to get into, but you just want to wait until it rejects that 250 range. And then the other indicators, by that time, the stochastic would have been, it should be back at the bottom, and then that RSI will be even lower, pointing upwards, and then you'll be able to go ahead and get in. And that's on the weekly. Let's check the daily. Let's see. Yeah, so the daily is showing us they have a little bit more room to the upside. With that, we could be seeing it get back to this resistance level of 477, 480. So when it hits this level, that's where I'm looking. Can it reject this level? If it rejects it, then we'll be seeing it go down. If it breaks above it, then we'll probably be seeing it try to get back to this this top resistance we drew at about I can't remember. Zoom up. At about 570 would be where it can potentially make it to if it was to break this 480, 470 range here at resistance. And I'll say that because if it breaks above that, even though that stochastic is in that oversold region, we'll have that pop with the MACD. We'll have a crossover to the upside, and that crossover to the upside could cause us to get back to this 540 range that we have here, or 575 range. If you want to be more conservative, you can drop it down to about 540 for the next resistance level. But yeah, so I would just be waiting to see. The things I'm waiting for is what happens at 470 at this resistance. If it breaks above it, we could be seeing that at 542. If it rejects it, then we're probably going to be seeing this end up ultimately going back to 258. And at that point, if it hits 258 and is rejecting 258, I'll definitely recommend going ahead and getting into a play, opening up a play, because we've seen from the previous data that when it hits this bottom support, rejects it and starts to trend upwards, it gets back to that $4.50 range or 4.70 range. Yeah. Any questions on Hive?
That's a good one. Thank you.
Mm-hmm. All right, next one is APA. Let's start off with the weekly. All right. So APA. Let's draw some support and resistance. First time seeing this stock, first time charting it. So right here, we can say it's currently testing a support level at its current price. If it breaks beneath that support level, we could be seeing it get back to about $17.80. And that's just because we can see here from this activity, stock price went down, it tested this area, rejected it, trended upwards. Even back here, it was going down, tested this area, rejected it, trended upwards. Even when it was beneath the support line, we can see it was going up, it tested this support before it started to pull back, and over here as well. So this is a nice strong, this is the next level of support. So the next level of support, if it was to go down, would be the $17.84 range. Now, looking at the indicators, looking at all of the indicators, the RSI is really low. So it's at 34. Stochastic is also low. We have a MACD to where the buying pressure is underneath the selling pressure, but it's getting close to crossing over to the upside. And we know that anytime the blue line is above the red line or orange line, however you're seeing it, it's going to cause the stock price to go up in value. So just looking at the technicals here, seeing that they have earnings or seeing that they pay dividends, it looks like quarterly. This could be a nice spot to go ahead and start to open a position or for a long term buying in here at this point, because we can see that it looks like we're at the bottom, right? Pair that with if you're holding it for a long term and you're reinvesting those dividend payouts back into the company, you can create that snowball effect, and it can just keep buying more and more shares, getting a higher dividend payout. So this could be a great place to go ahead and open up a position or add on to your position, just looking like this is going to be the bottom. And then that's just paired with all of this information. The RSI is low, stochastic is low, that MACD is getting close to a crossover to the upside. And we can see that we're testing a support level. So if we can reject this support level, go ahead and get shares. If it breaks beneath it, again, this next level is 1784. That's a strong level of support. So you see it start to get close there. Just look and see if it's going to reject this support. And if it does, you can get in there as well. And let's check out the daily to see how it's going to be moving. All right. Yeah, so the daily is showing us everything's low. We're really close to a MACD crossover to the downside. So again, I would just be waiting, because with that crossover to the downside, that could start to have us try to get back to that $17. So our next support that we have, I think it was at like 1780, if I forgot the number already. Yeah, 1780. So we could be seeing it get back to 1780. So I would just wait a little bit just to make sure that this crossover happens on the MACD. Once that crossover happens, that's going to pull it down a little bit more. Once you start to see that it's testing the bottom, it's establishing a new bottom, you can go ahead and get into that play there. But it looks like it's getting relatively close to the bottom, just looking at the RSI level and the stochastic. So you're getting really close to going ahead and getting into a play here. This is a good stock as well. Any questions on APA? Perfect. Next one. The other dog. Okay, let's check out the weekly. All right. So let's draw some. So current price 160. It's basically testing its resistance level. The next place for resistance, we can draw it up here at 200, but it looks like the next nice place for resistance would be here at about 179. So almost a $10 increase from his, or excuse me, almost a $20 increase from his current price at 160. So with that, that's resistance. It looks like RSI level. It has a little bit more room to go up, but that stochastic is at 100, so it's basically at the top. So we should be seeing some type of pullback happen soon with this one. Will it be at 160 and start to pull back, or will it be at 180? We'll just have to wait for the market to open Monday to be able to determine. But it looks like at this point, if it was to reject this current resistance, this current level, and trend downwards, the next place is going to come and test, we can say, would be here at about 140, just because of the activity we have back here. And then even over here, we see the stock was going up, got close to this level, rejected it. Even when it broke above this level, it pulled back to this level first. So it broke above this level and pulled back down to about 140 before ultimately breaking back down. And even when it was above it, we can see it tried to get relatively close to it. It got to about 143 before it started to trend upwards. So that's the level that we could be seeing it get to if it was to trend downwards. At that point, I'll be looking to see, okay, where are all of my indicators? Is my stochastic RSI pointing downwards, or is it inside of that sweet spot? Is the RSI inside that sweet spot? And how the MACD is looking? Is the blue line above the red line? So I'll just be looking at those things. And that's on the weekly. Let's check out the daily. All right. So looking at the daily, yeah, daily is showing us is pretty hot. RSI level is at 80. Stochastic is at 100. This needs to cool down. And if it's going to start to cool down, first place is going to come and test is this 160 range. After that, if it breaks beneath it, yeah, it'll probably come and test 155, but ultimately it'll be coming back and trying to test this 140. So at 140, again, that's where I'll be looking to go ahead and start to open up a position. Monday, if you're already in a position, I would be just looking to see how much is if it looks like it's about to start to go down. It looks, again, from all of the indicators, it looks like it's about to start to pull back. So I would be looking to go ahead and at least shave profits. If you haven't already, go ahead and start to take some profits and just wait for that pullback to happen to reinvest back into it. Any questions on Datadog? See, we have Tesla. All right. All right. Tesla. So currently sitting at about 390, 370. We can see that it's testing resistance at this point. If it was to break above that, we could be seeing it get back to about 400. All right, we could be seeing this get back to 400. If it was to break above, and I'll clear out some of these other supporting resistance. So we could be seeing it get back to 400. Now, if it was to pull back, trend downwards, the place that is going to come is at about 316. Before that, we may see it come and try to test about 340 before we see 316. But ultimately, it'll probably, if it starts to pull back, we'll be trying to see this trend back to 340. And that's just the next resistance support levels we have. Looking at the RSI, it's pretty high. Stochastic RSI is also pretty high. This is, if you're looking to get into a play, I wouldn't recommend getting in right now. I would be waiting for this to start to cool down a little bit before I get in, because that's we know that stochastic has to pull back. Even if it's going to stay up here to 100 or in between that 80 or 70 to 80 range, 80 to 100 range, excuse me, we know that it's going to have to pull back a little bit at some point. So I would just be waiting for a good pullback and a little cool down on that stochastic RSI level before I get in. But the levels that we could be seeing It's going to be again 400 if it's going up. If it's pulling back, first place, 340. After that, 315, 316, and that's on the weekly. Looking at the daily showing us on the stochastic, it has a little bit more room to go up. It hasn't hit that 100 range just yet. And again, with that, I'm thinking it will probably see it hit to that 400 range, the very top of our last resistance level. Now, if it's going to reject, we could be seeing it come back to 340. I have a question. Go ahead, Jessica.
Did you just say this is the daily?
This chart right here is the daily, yeah.
I mean, because at the bottom it has like months. So wouldn't it be like the monthly?
Yeah, it has months here, but each candlestick is representing one day.
I see.
Yeah. If we was to, it's just because how far I'm zoomed in. So I zoomed out. So if I zoom in more, you'll see it's going down.
Oh, okay.
It's just because I was zoomed out so far. Yeah.
Yeah.
We can see this is
so
today or Friday. Yeah. So if it was to go up again, 400 is going to be where it's going to come and test. I'm looking to see what happens at 400. Our stochastic is relatively high. That'll probably get us to 400, maybe a little bit higher than 400. And that RSI level is also pretty high. So I'm thinking that this does need to cool down eventually. With that cool down, 340 is probably where it's going to come and try to test. After that, 317. Any questions? Okay, perfect. So Tasha, you put sound in there. Are you talking about sound hound? Just want to confirm with you. All right, so I'll double back on that one for Ty. But yes, okay, perfect. All right, so let's. All right, perfect. All right. So we can talk about SoundHound. So SoundHound, relative about 2 years since they first IPO'd. We can see that they're basically testing the last level where they first opened up at, which is going to be here. So this is a nice little resistance that it has at about $11.96, about $12 is probably where the IPO that what $13 is where they IPO. So we could be seeing them try to get back to their initial where they first opened up at. If not, and they're rejecting the first level that they're not gonna come all the way back down to 1 to 79 off the rip, right? You see, we have some type of activity here at about $10. So the first place that I would say that it can get to, if it was to pull back, is first going to try to come and test about $10 in this profit. If it was to break beneath that, and we could be seeing it try to come back to $7. Looking at the RSI level is pretty hot. The stochastic is also pretty hot as well. I see they've been running up because of their earnings report. So if you're looking to get into investment here, I would be a little bit cautious, and I would I would definitely be waiting for this RSI level and stochastic to cool down on there. If you caught this wave, this might be a good time to go ahead and start to shave profits, take those profits out as well. It looks like this could be the peak at the moment. And again, if it was to pull back, $10 is the first place it's going to test. After that, it's coming back down to $8. And that's on the weekly. Let's check out the daily. All right. So we're looking at the daily, we can see current price 14.35 is where it's saying is at 14.37. Yes, it has a little bit more room on that stochastic. Not a lot. It's one value before it hits 100. RSI level is pretty high. I'm looking for this to cool down. I'm looking for it to have to cool down and with that pullback again. It looks like it'll test 12 or 13 first, and then ultimately be coming back and trying to pull back to this $10 range. So I would just be a little bit careful. I would be waiting for this to have that cool down before I actually get into a play here. And with that cool down, first place it can potentially come to is going to be that $10.24 range. From there, when it hit that level, that's when I'm looking to say, okay, what's happening? How is the charts looking? How are my indicators looking? Is it going to reject this level? If it is, you can go ahead and try to do a little swing play, and the swing will be back up to this resistance at about $12 and at about $13 will be your resistance level that you can say, okay, that's where it's going to potentially get to if it was to reject down here. But you would have to wait for it to get back down to 10.20 first. I wouldn't necessarily say go ahead and get into this play now because of how the indicators are setting up as being overbought right now. Any questions? Check the time. Okay. Let's check out JD. JD. JD.com. All right. So you can see JD.com has currently testing support. We have support here at about $35 will be support level. If it was to break beneath that, the next place that it's going to come and try to test, you can say it would be around here at about that's going to be at about $30. So at about $30. So we have support at 35, and then 30 will be the next level of support we'll have. Looking at the indicators, the stochastic on the weekly has a little bit more room to get to that oversold region. And with that, if it does pull back, we could be seeing this get back to this 30 range. Yes, excuse me. Now, if it's rejecting this level of 35, we could be seeing it trying to come back to about 45. Why I say 45 is because that's going to be the top. And then with that 45, if it's increasing up there, there's two things that could be happening. It could be creating a double top, which we know is bearish. And double top creates a M shape. So you'll have, we could be seeing the stock going up, coming down, testing this level, going back up to about 45. And then once it's hitting it, we could be seeing it coming down and trying to ultimately get back to $25. So that's one thing that could be happening. Or it could be creating a bullish flag where if the stock price gets back to that level, we may see it pull back down again and then come back up and ultimately start to break up to the upside. So we could be seeing that as well. So we're in no man's land right now, but with this rejection, what's going to probably happen is we're probably going to see the stock price reject this 35 support level and start to turn back up to 45. So you could, if it's rejecting this like the next week, if it's green, we're probably going to be seeing this get to 45. You can play it up until 45, and at that point, once it hits 45, you can go ahead and get out of the trade and just wait to see what happens, or just pay really close attention to it and see, can it break above 45 and stay up there. If it does, then this could be a bullish flag. But if it doesn't, then we could be seeing this become a double top. So just be careful with that. That's why I said you can trade it up to here, get out, and figure out what it's going to do. And once it has confirmed if it's going to be bullish, you can get back into the trade. But if it hasn't and it's saying it's going to be bearish, you're already out the trade, and you can just wait for that pullback to happen before you and decide what happens once it hits this 35 range again. And then again, that's on the weekly. Let's check out the daily to see what's going to happen. Yeah. So the daily, again, the stochastic was high, it's coming back down. We could see it get back to 50 neutral zone, or it looks like it may be trying to reject and go back up to that 100 range. So I would just be, we're just going to be watching at this point. Now on the daily, we can draw a little bit smaller support levels or resistance. So the first place is going to test is going to be at about 40. That's going to be the first level, which we see all this activity. What happens? This week, when this stock hits 40, can it break above it? If it breaks above it, we'll probably be seeing this ultimately try to get back to 45. Now, if it gets to 40 and if it doesn't, it rejects it, then we're probably going to be seeing this get back to 35. But this is just going to just wait on Monday to see which way it's moving. And again, if it breaks above this $40 range right here, that's going to be a good place to say, okay, it's probably going to get to 45. You can go ahead and get into a play. Once it hits 45, 44, $45, go ahead and get out. Let it cool down. And then once it cools down, reevaluate it, and you can get into the trade again. Any questions on JD Retail? Okay, perfect. Model. Okay. Start off with the weekly. All right. So we can see here that Baidu is currently testing support. This is a strong level of support. We see last time it tested this area, it rejected it, trended upwards. Even if we scroll back, look here, it's coming down, tested this area, rejected it, trended upwards. So this is a really strong level of support for this stock, which is at about $81.51 or $82. So with that, even right here, it tested this area, rejected it. So we could be seeing the same thing happening now. We could see that the stock price has been testing this area and it's rejecting it, and we could start to see this trend upwards. Now, the first place, if it's rejecting it, it's going to go and test. It's going to be here at about $97.50. So with me looking at the previous history, what I would do is I would just, if you're looking, I wouldn't necessarily be trying to play this like each time it's going up. I would go ahead and get in and just buy and hold, because we can see that when it rejects this level, it ultimately tries to get back at least to this 156 range. So this is a good little play that you can get into, long-term hold or short-term swing trading. You might have to hold it for like a year or two before it gets back to that level that you want. But ultimately, if you was to get in now, the way that this is setting up from the previous history, we know that it's at least going to come back to this $9,700 range, right? So if you get in now at about 85, you'll be making about $15 per share that you're getting in here. And then again, RSI level, pointing upwards is almost to that neutral zone. It's pointing upwards at 43. Stochastic is really low. It's really low. And then MACD, we just had a crossover to the downside, but it looks like probably after when the market opens next week, we should be seeing this get even closer to having a crossover to the upside. And if not next week, then next week we'll have that crossover on the weekly. And let's check out the daily. So the daily stochastic is a little bit high. So we could be seeing this on the next few days. We could see it pull back and try to test that $81 range again. But looking at the RSI level, just the RSI level, it's at 47, pointing upwards. So we could be seeing this eventually go on that run that is going to take for us to get to 97 range. That's why if you're looking to hold this for a long term, you can go ahead and get in now, open up a share, open up a position. If it pulls back, just dollar cost average down. And then with that, once it starts to go higher, because you average your price down, you'll start to make profit quicker than what you originally was. But you don't have to put all of your money in right now. So if you wanted to invest, let's just say, I'm just going to put $100, right? You wanted to invest $100, you can go ahead and just invest. You can go ahead and just invest $20 of it. And if it pulls back, you can go ahead and add more in so that you can dollar cost average your price out. But yeah, this is looking like a good play as well. Any questions? All right. Perfect. All right, then. See, I have one more, a little bit over time, but I'm just slide it in because it's Alibaba. Look at the weekly. All right. So Alibaba, again, it's coming down. It's probably, if it continues to come down, the place that it's going to come and test is going to be 80. 80 is going to be a good range for this stock. Anytime it tests this area, we should be seeing some type of rejection. We was trading Alibaba for quite some time previously. So if it hits 85 or 80, excuse me, that's going to be a place where it's going to be a strong support level. And with that strong support level, if it rejects that, the next place it's going to be coming to is 90, 91. Looking at the stochastic, it's really low, oversold region. So we're getting close to that bottom on the stochastic. RSI level is at 49. So that's it's inside that sweet spot of 45.55. We do have a MACD crossover to the downside. So that's why I would say just wait until it rejects the support before you go ahead and get in. Once it's rejecting support, that's when you can feel more confident to get into that trade and hold it for the upside, for the long term. And with Alibaba, I wouldn't necessarily say it's going to be a quick trade. You might want to you'll probably have to hold it for a little bit, but it's always a sustainable company. It's like the Amazon of China. So the way that we treat Amazon in America is the same way that they treat Alibaba in China. So it's a good company to invest in. Looking at the RSI, the stochastic on the daily, it's getting close to that overbought region. So we may be seeing a little bit of a pullback. Again, with that pullback, is going to be coming back to that 80 range. And with that pullback, 80 range is a nice place to go ahead and get into a play for this. And you can ride this up to 90, and then potentially after that, if it breaks above it, we're going to see 100, and then after that, we'll see 104 and then 118. And again, all of these levels that I have drawn have been from previous trading periods. So they're all strong levels, and they're probably going to come and test each one of those. Any questions on Alibaba? All right, perfect. So I'm going to pass it off to Ladarius so he can close this out. Thank y'all. I know I ran over a little bit. Ladarius, you there?
Yep.
All right.
Yep. My bad. I was moving around and disconnected my monitor trying to fix something, but I am here. All right. Thank you to everybody that joined. Let me stop the recording so we can get this uploaded to YouTube.